Good evening, viewers, and welcome to a brand new episode of Mirror Prime. I'm Ashish Pareek. A major development has now taken place that could impact your finances in a very big way. The Reserve Bank of India has taken a significant step by cutting the repo rate by 25 basis points, bringing it down to 6.25% from the earlier 6.50%. Now, while 0.25% may seem small, its effect on the loans are substantial, especially for home buyers with long-term loans. But the big question on everyone's mind is, will your EMIs go down? How much will they actually drop? Will home ownership become more affordable, or is there more to this than meets the eye? This, in fact, remember viewers, is the first rate cut in nearly 5 years after 11 consecutive policy meetings in which the repo rate remained unchanged. The decision is expected to make loans, particularly home loans, even more affordable for millions of Aadmis across the nation. For instance, let me explain to you via an example what really happens with this repo rate and how it will now impact you. For instance, let's assume that I've taken a home loan of 50 lakh rupees. Now, this is for a tenure of 20 years at 8.5% interest. Now, what happens is that usually my interest rate would be calculated at 8.5%. But with the repo rate now cut, my interest becomes 8.25%. Now, remember, this is only if the banks agree to it. If that happens, my interest rate will become 8.25%. So earlier, I'll ask my team to go back to the previous plate now. Earlier, the EMI that I was supposed to pay, 43,391. That EMI now reduces to 42,603. So what I was paying earlier now reduces to this. What this means is that every single month, I will be saving 787 rupees. This might also sound less to a lot of people. Annually, this translates to 9,454. A little more, and of course, a significant increase. But if you look at the entire loan tenure, I would be saving 1,89,091, and all of this because of just a small 0.25% change by the government in the repo rate. So this has significant benefits, and the example that we took was only 50 lakhs. If your loan amount is 1 crore, 1.5, 2 crore, or even more, the benefits are absolutely massive. And adding to this benefit for the Aadmi now, there's also the mega income tax relief that was announced during the union budget. So clearly, the government has now heard the middle class, and the Modi Sarkar wants the Aadmi to have disposable income. So the big question on the show is 2025 finally the Achhe Din arriving for the Aadmi. Will these benefits really sustain, or will the government now try to offset this by collecting money through some other measures? Do we have to be watchful in the future? Lots of questions that the Aadmi across the nation has today, and of course, we will be discussing that and a lot more with our guests today. But before that, let's listen into what the RBI governor had to say.
The MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%.
All right. So clearly that was the RBI governor talking about the changes that will happen and how it will benefit you. Joining us right now is Vivek Banka, financial expert. Vivek, first question, of course, help us understand the logic behind this repo cut. What's the government trying to do here?
For having me on the show. And I think this rate cut was very long overdue. If you see, the real interest rates in the economy have been a little high for some time. The post-pandemic demand, which was there for 2022, 23, and some bits of 21, that was ebbing. Last 2 quarters, if you see, the GDP growth had come down substantially. The RBI and the government is around levels of 6.4%, which is very low over the last 2-3 years. And but the only thing which the government has still not addressed is the liquidity deficit in the system. So now if you see, the banking system is suffering from a massive liquidity deficit, because of which, even though the interest rates have got cut by 0.25%, the impact of this on the end consumer will take at least 3 months of time. I do not think that least until April, banks will cut lending rates because there will be the advance tax date of 15th March, which could suck out further liquidity from the system. So it needs to be seen whether this will get passed on to the end user or not. I think it is at least 3 months away. If you see the 10-year government bond yield, post the rate cut, actually it has gone up. So when with due respect, when the media or anyone splashes news articles like interest rates have come down and this will impact people immediately, what happens is the individual investor starts thinking that immediately there will be a rate cut by the bank.
Absolutely, Vivek. That's
But they
exactly
have to
the
understand
reason why,
it.
when I was explaining the graphics to our viewers, when I was explaining the changes that will happen, I also at the same time mentioned that the
Yes.
interest rates will come down if the banks actually allow that to happen. And also joining us, I believe, right now is Dr. Nishant S Mehta, who's a financial and banking expert. Dr. Nishant, now, I was speaking to one of my team members here, and one of the things that they had to say is that as soon as there is an increase in the repo rate, immediately you see the banks also hiking the interest rate. Why isn't the same enthusiasm seen when the repo rate is cut?
If you see, the repo rate cuts will impact the bank in terms of earning and all that, because you need to reduce the interest rate. Every time the interest rate actually cuts only when your term starts. So if you look at the agreement of the home loan on any agreement, there is a time period, a monthly spread if it's a floating rate. So on that basis only they will cut the rate. So that's the reason if you reduce the rate, it will lead to higher rate of inflation. So that's the reason the bank will take time to cut the rate, as will be rightly said by my fellow panelists.
Absolutely. In fact, Dr. Nishant, there's a saying in Kannada. I am not sure if anyone on the panel understands Kannada, but there's a saying that says that Devru kotru, Pujari kotila. So basically, it's like even if the God gives a blessing, the Pujari then has to give the blessing. Only then does it get transferred. I think that's how it applies to this as well. But meanwhile, Ajay Duaji, you're of course a former secretary of Ministry of Commerce, and you've dealt with all of these things in the past as well. Now, a repo cut might, of course, affect the Aam Aadmi a lot. But again, if you look at the whole context of this comes right after a massive income tax relief. Both of these measures, whether the banks allow it or not, will massively benefit the middle class. Do you see a pattern here from the Modi Sarkar? Do you think there's more to come in the days to come?
Thank you, sir. Thank you very much for having me on the show. I like to just explain by saying both the steps which have been taken, be it the reduction of the incidence of personal tax on the middle class by way of the higher exemption limit and the recasting of the slabs, and now starting with the process of reducing the repo rate. It might be just a slight reduction of 0.25 or 25 basis point. I'm calling it slight because compared to what it was in 22, which was 4%, we went up to 6.5% in a course of 3 years. And then we have maintained it at that high level. So for the first time, we are effecting a reduction. The two are both steps in the right direction to spur growth, because hitherto the bank, perhaps rightly so, because that's in its charter, growth is not in the charter of the Reserve Bank of India, but price stability it is, and for that the major tool which is in the hands of public servants like a public service like the Reserve Bank is the monetary policy. But is that adequate to spur the growth? I would have my reservations for twofold. One, transmission takes time, as was being discussed a little while ago. Second, is that adequate? I think if we really want to pump in more money, I would have expected much greater relief even in the budget for the middle class. As middle class and the lower class, who are the ones who spend, who have a higher marginal propensity to consume? For them, much more, if we were to put more money in their hands, disposable income or higher, it would have turned into higher demand, consumption, and accordingly led to the cycle of higher investments by private sector, for which there has been hesitation in the last 3 to 4 years. Similarly, I'd like to see the 25 basis point reduction effected today also revisited and perhaps favorably revisited in the next MPC meeting 2 months down the line and the one thereafter. The question is, we have to effect the growth, unlike in the past, in headwinds coming geopolitically. And we don't know what's happening in the United States or what will happen vis-a-vis us. Let me put it that more squarely. So far, we know what the new administration is doing vis-a-vis 3 or 4 larger countries. But on the whole, the greater protectionist measures initiated by President Trump are going to affect us as well, because the global trade is going to shrink and our exports, which are elastic, will not increase as expected, whereas our import bill, because it's inelastic, we have to import certain amount of items, particularly our fuel, fertilizer, etc. There will be hit. So I'm keeping my fingers crossed on what will be the effect and whether the measure taken today is itself adequate to spur growth in the economy.
Absolutely, absolutely. Ajay ji, very interesting point that you made there that, okay, this might sound a lot right now, 0.25%, given the relief that we are showing right now, putting in context the income tax relief as well. But if you look at the overall context where we were 4 years ago, it's only a marginal relief. Now, Vivek ji, you were making a very interesting point earlier. You were talking about how repo rates, in fact, this is something that I want to tell the viewers as well, that repo rate cuts don't always lead to instant rate cuts for the customers as well. So all the viewers watching right now, calculating the EMI for the next month, hold on. There will be some time before you actually get the benefit, before it all trickles down to you. Now, Vivek ji, continuing with your earlier point, how soon will customers see lower EMIs? Is there a possibility that banks could delay passing on the benefits even further? All right, all right. I think there's some sort of an issue with Vivek's frame there. We'll go back to Vivek. But also, I believe joining us right now is Vijay Sardana, who's a senior economist. Vijay, this, the same question to you. How soon can customers expect to see lower EMIs? And do you expect some sort of a delay coming in from the banks? All right, there seems to be some audio issue that we're getting right now, but of course, we'll try to figure it out. But meanwhile, let me go across to Dr. Nishant S Mehta. Nishant ji, one of the biggest focus right now, even on the show right now, is the real estate sector. Now, this will, of course, one of the direct benefits will be for home buyers, people who've taken loans, and especially those that have long-term loans. How do you see this particular move by the government now affecting the real estate sector, both in terms of the property prices and also the consumer demand?
Okay, so I would like to say that the real estate definitely will see a boom in terms of buying of a lot of properties because the interest rate has already come down. And I would like to address the earlier question which you addressed to the other panelists. The interest rate will always remain impacted, and the RBI will only cut, the banks will only cut once as per their agreement. So if there is a monthly change in the interest rate or a quarterly impact, then either you will see in the April month, and if it is a monthly impact, then you can see the impact in the next month itself. Now coming to the question of the real estate, definitely there will be a boom. People will be saving a lot of money because of less of EMIs interest rate, and definitely it will reach to an extent that there will be a higher purchasing power for the properties. So you see a boom in the real estate industry, definitely.
Absolutely. And in fact, Dr. Nishantji, it's not just the real estate sector. Auto loans, education loans, personal loans. I mean, every single sort of a personal loan might see a rate cut now.
Definitely, I can see a major impact in the luxury goods like cars, TV, refrigerator, consumer items. Definitely, you will see a lot of people buying these items because of cut in the interest rate. Now, if you look at the volume of India, definitely it will reach to a lot of consumption of buying power because of the rate of interest cut. So you look at across all industry. The only people who will be impacted with people who are earning from the FD, the senior citizen, definitely there will be an interest cut in the saving of the FD also. So that will be one major impact which can be seen because of the lower interest rate in terms of income.
All right. All right. Also, Dr. Nishant, the flip side of this, inflation, do you think it's also essential to monitor the entire impact of repo rate on inflation as well, to at least ensure there is some sort of an economic stability going forward?
The negative impact, yeah, definitely this might lead to a higher rate of inflation also. And one more negative impact can be that if people are borrowing more and if not able to pay the loan, it will lead to more of NPAs and this will impact the banks at all. So definitely we need to take care in the terms that who are the people who are going to buy, and people should not jump on immediately buying because their interest rate has gone down, because they need to know if the repo rate suddenly increase in the future, then how will they will survive the cost. So definitely this will lead to a higher inflation rate and we need to be careful of that also. More consumer buying it out, demand working on it leads to the higher inflation.
So, Dr. Nishant, for all the investors watching right now, what's your message? What's the right thing to do right now? Because we're not really sure if the current high rates may sustain or may disappear soon. Therefore, is this the right time to invest in something, for example, say a fixed deposit?
Not in the fixed deposit, but I will say people should actually look at the saving in the interest cost. More saving will see that your principal amount repayment is increasing. So what you can do, whatever the saving you have done during the year, accumulate that and try to pay some of your loan. So automatically it won't impact even if your repo rate increases. So this will help you reduce your financial burden. And if you're getting a better return, more than around 8 to 10% in some other industry, then shift your fund from the housing loan, borrow it and invest into something which will give you a higher return. But in the FD, definitely the rate of interest is going to go down. So I will never advise into investing more into the FDs.
Absolutely. Also, Dr. Nishant, now let's look at the overall picture here, because from the income tax relief in the union budget to this particular relief now, there seems to be a very concerted, clear effort by the Modi Sarkar to ensure that there's more disposable income in the hands of the Aadmi. What do you think the government is trying to do? What's the whole? What's the big picture?
They're going to give more. The concept is clear. They are looking at the middle class getting more richer, because this was missing for the last few years. And now if you can see higher disposable income, 12 lakhs non-exempted, exempted income will definitely make more and more people non-taxable. And this will impact the earnings of the people. You will have more disposable income, you will earn more, you will go more family trips. Everything will lead to indirectly collection of revenue. Because whatever you do, you are paying a GST or you're paying a VAT or anything. If you have more disposable income, automatically you end up buying something and you pay a GST. So automatically you are adding to the revenue of the country itself. So that's an indirect way of getting money from the consumers. You save, give them a disposable income, and they spend the money into some buying of asset or luxurious item or travels.
All right, Dr. Nishant, I really appreciate you joining us on the broadcast, sharing all those details with us, and also helping us understand what exactly this means, the repo rate cut, because usually when we hear about a repo rate cut, we haven't heard of it in the last 5 years, but whenever we hear about it, it is a confusing concept for an Aam Aadmi like me. So it really helps when experts like you actually break it down, help us understand that, all right, this is the amount of money that we actually will be able to save at the end of the day. And again, like you also mentioned, this is only and only if the banks also pass on the benefits, because whatever the RBI has done, these are the benefits that are given to the banks. If the banks pass on the benefits to the customers, that's only when even the Aam Aadmi will be able to save it. Really appreciate you on the joining us on the broadcast here for this very important discussion. And viewers, on that note, let's slip into a short break. Lots more lineup on the other side. Stay tuned.